a rundown for those who don't know who you are, which I think that's very few people, but ultimately we want to make sure everybody's caught up to speed here.
Thanks, bro. I appreciate that. So short story is I started trading in 2015. I was at the time selling life insurance with Northwestern Mutual, Mass Mutual. I was trying to get into finance that way. And I ended up just stumbling upon day trading. So I started to learn and study, and I lost a lot of money in the first 4 years, basically. First 2 years was just awful. The next 2 years, a little bit better. It's the most recent 4 years where I've really come into stride, and every day still trying to get better. But my brand, ASFX, we started that in 2019. Prior to 2019, so between 2018 and 2019, late 2017, I worked for a firm in New York City. It's a prop desk. I was doing education, running a live room, doing a bunch of stuff with them. Learned a lot, met a lot of really cool people. And then my wife and I started, like I said, ASFX in 2019. And since then, we do seminars, we do courses, we do mentorship, do a lot now. We have a live streaming service. So it's grown into a business with multiple legs, which I am very grateful for. And that's basically my short story.
Nice, man. Nice. No, I mean, I actually kind of, ran right into the second question I was going to ask you, which is, how coming from New York, if you don't mind diving in a little bit, you and I talked about this, the Miami weekend and that kind of stuff, and want to kind of give people, peel back the, the hood there and let them see kind of what it was like there, and then why you decided all of a sudden to, you and your wife go, well, let's do this together. Let's make something. And you've obviously made an excellent brand, up to this point.
Well, I appreciate you saying that. My wife definitely gets a lot of credit. It's funny because I'm like the entrepreneur of the group between me and her and our team. And I've always been a hustler, just trying to make money, trying to get ahead, because I always understood that money was freedom. You know what I mean? I don't do fancy stuff that often. I'm not into a lot of that stuff, but money is freedom. It gives you the ability to breathe and then figure out what do you actually like doing with your life. So that was the thing that always motivated me. But she had a marketing degree from Temple. I dropped out of college. So she had, I guess, maybe seen some potential in me in some way that we could make this work together. At the time, I think when she really started to believe in the business, we weren't even dating. She just saw that we could be business partners. So it just grew from there. And she was looking at how much money I was making from the firm every month. She's like, you're getting 20% of overall sales. You could be making way more money. We can do this better. We had an interesting situation with them too, where, like I said, I would never make it positioned to look bad, because I love those guys. It was an awesome experience. We did some marketing stuff, bro. And we crushed it on Instagram. They gave me a little budget to spend. We did some ads and stuff. We crushed it. And they then didn't continue to support my marketing in that way. So I think it was really the marketing aspect of it that drove us apart. I did a funny video once, bro, in a red robe at my trading desk with a gold chain. It was a cheap ass silk robe from Amazon, bro, just to get some attention. You know what I mean? I'm not going to you guys have the cars, and that's what pulls attention for sure for you guys. I was let me get creative and funny and make people laugh.
Humor sells.
They hated it, bro. I got yelled at so hard for that. So it was just we didn't jive on marketing. You know what I mean? It was never a trading thing. The trading side of their business is amazing. So that's why I always kind of believed in the prop stuff. And when you guys approached me, I was like, all right, this is awesome. And it's just you guys are prop 2.0. That's how I see it. The funding stuff is prop, because you're able to do it from home. You know what I mean? That's the thing.
Exactly.
Yeah.
So, and that's the problem with prop historically. You'd had to be in New York at a desk with a special license. You're only trading certain assets. It was very non-inclusive. Only a very few group of people got into it. Now, really, anybody can get into it. We've opened it up across the world.
Yeah. And I'm sure now that I'm thinking about it more than I normally do, they were moving in a direction of more retail, more at home kind of thing, very algorithmic too. So I think that you guys, are positioned for the future. That's what we talked about, both of us, in both of our videos I did with you guys. You guys have set yourselves up to be a firm that's not pop and drop. You're doing the right things, right. I think, that are aligned with the old school. It's the best of the old school mixed with the new school. That's the best way to say it.
Nice.
Right. Absolutely. High integrity, high technology. We've got a good blend of everything.
Exactly.
Well, awesome. From your perspective, and Corey, I want you to chime in on this too, obviously, because you can give us the rundown of how SurgeTrader separates themselves from all the other, firms out there as well. Austin, you think that there's an energy in the air, so to speak, because of the opportunity people have of being able to get a, $25,000 account that they can manage now, 250,000, $500,000 to $1 million that we offer here at SurgeTrader. Talk about that and why that's such a special thing, because I think everybody realizes it's not an overnight sensation thing, as we both know, but what does that do to people, mindset wise, and then coming into the trading space if they're brand new?
I think that you said that well. It gives people, first of all, like from all angles, an opportunity. For example, some people, depending on where you are in the world, first of all, let alone your expenses and your lifestyle and all that stuff, some people like will do well with the profits they make off the 25K account. You guys offer that. You guys cater to those people. Some people are going to need a 500K or $1 million account in order to be satisfied. You guys cater to those people. So it covers the whole spread. So I think that's a really important thing. Then, like, again, you're talking to somebody, I've looked at charts probably every day in those 8 years. I've missed maybe 100 days, you know what I mean, of not looking at a chart.
Yeah.
So I'm talking like trading details. Spreads are very important. If the spreads suck, you cannot make money. Go back to when I was working at the firm in New York. Just to break off for a second, I was originally brought on there to be on the trading floor. The spreads with their broker at the time for Forex was terrible. So for me as a short-term trader, I couldn't make it work. Yeah. That's when I shifted over to the education with them, the education side of the company. So spreads are very important. And already, because I've been funded with other firms, not just you guys, and I see the spreads you guys offer, you guys beat a lot of these firms. So I think that's another really important aspect. Not just can you get a funded account from any size, but when you actually start trading the account, the spreads are really good. Like you can actually get, especially if you're a short-term guy. Correct me if I'm wrong. Absolutely. You guys don't do weekend holds, right? Everybody's got to be closed out by 3:45 on Friday.
Currently, you're right, 3:50, so 10 minutes before. Okay. However, that's something we're exploring. So stand by. Keep your eyes open for some exciting announcements coming down the line. That's definitely something that's been widely requested across the board, and we are investigating it actively.
Yeah, good. Because you know what? I think that's a big step, honestly. Like from a trader's perspective, to have to worry about closing out my trades.
Sure, of course.
Especially if it's in an asset that sometimes takes think about Bitcoin, right? Bitcoin just took off like 2 or 3 days ago, and then it goes sideways for 5 days. So if I have to close my trade, that puts me in a tight spot. But if I know I can hold, oh man, that's another game changer,
Exactly. That's the nice thing about being with a firm that's we're very open to customer feedback. We recently, as you know, we've just relaxed the trading rules. We went from a 4% daily drawdown and a 5% total drawdown to a 5% daily and a 6% total. So almost a 40% increase overall on both of those. So a tremendous amount. And that's one of the requests we got a lot. Another one, like you said, weekend trading, tight spreads. So we're able to build the program to suit the trader. So our ears are open. So if somebody's out there, you guys have feedback for us, definitely bring it on board, and we'll take a look at it and scope it out and make sure we can bring that to you guys.
And people, traders like myself and Julian, we're not shy to share our opinion, are we, Julian?
Absolutely.
Never.
Exactly. Corey, is there anything you want to add as far as, prop firms, what we do different, that kind of stuff? I mean, you and I.
Yeah, no, absolutely. So my big thing with Surge and Austin brought up a great point earlier is that, I always like to tell people, so I come from traditional finance, and I've worked with a ton of traders, and over the years, I was able to help people with almost everything. You need better charts, you need better pricing, faster data, all these things I could fix. The one thing I couldn't fix was access to capital. So when I had the opportunity to come to Surge, I wanted to jump on it because I said, man, over the years, there's been so many people who called and said, I have all the other ingredients, I just don't have the bowl to put it in, the money, and I'd have to turn them away. And when I was able to come to Surge, I figured we'll be able to serve all those people in a really helpful capacity. And we do. And but the main thing I was so surprised by, and this is something Austin touched on, was the people we're helping at the high end. So, there's very wealthy people, millionaires, multimillionaires, who don't want to trade with their own money in the market. They're using higher and better use. They're putting in real estate. They're putting in metals. They're putting back into their business. Why trade with their $1 million when for a set predetermined risk profile, they could trade with our money? And so we have a ton of people who utilize the program in that capacity. So don't think it's just for people who don't have access to capital. The program is really for everybody.
I got a question for you guys. So I saw a stat on Twitter from a funding company, some other, I wouldn't even call them a prop firm. It's a little bit different. They said that like 400 accounts were blown within 2 seconds of each other during CPI on Wednesday. Do you guys find that SurgeTrader has that type of turnover, or have you guys attracted a different kind of trader?
Well, we certainly have. So one of the main things with prop trading, I tell people this all the time, is there's a predefined set of risk rules that come with the account. So anybody who's coming to us and they're punters or just gamblers or looking to put the whole account on red, it's really, that's not the trader we're going after. We're going after somebody who is a little more cognizant of the risk. We put those guide rails in there so that they, as they're taking turns around the corner, they're a little bit safer. So by just naturally, they're going to have a better trading strategy to begin with. Also, we have lot limits. So we're not going to let you put the entire account on, where a lot of these other firms, it really goes back to our one of our main competitive advantages is that we fund with real capital. And this is, people say, oh, I don't care, I get paid out anyways. But it's so important because, one, we pay out on profitable breached accounts. So if you're in the money, you have a bad day, the CPI numbers come up, we'll still pay you out if you're profitable. This is something you're not going to find in any other prop firm. Second, our interests are highly aligned. So we want you to be successful because when you're successful in the market, we share in that profit split. We're not paying out on house revenue. So it's a very important distinction. And so we do have those rules and kind of guide rails. And one of those is lot size limits. So we're not going to let you wager the whole account. One, for our risk profile, and two, because you have the opportunity to really get blown out.
Yep, makes sense.
Yeah. Now, Austin, I want to transition a little bit because of your years of experience trading. How do you feel that the current climate conditions, right, in the markets are changing the way you trade, perhaps? For the viewers who are watching this, what should they be doing? That kind of thing.
Sure.
And then we'll ask Corey. Get the analytical.
But before we do that, Julian, if you would, just for the people who don't know Austin, would you just give a quick background of your trading philosophy before you get into so how you approach the market, and then tell us your current events?
Both, I can tie both answers together pretty well. The philosophy definitely is more reactive than forecasting. I like to forecast. I like economics. I like the macro stuff with the war and all the this and the that and how this impacts that. I could sit there, we could smoke cigars and hang out and talk about that for 5 hours and I wouldn't care. But when it comes to trading and actually putting money into the market, anytime I fight the technical indicators, which are always reactive more than forecasting, I end up burning myself. So first of all, the philosophy is definitely based in reactionary trading, not forecasting. Some guys do well calling tops and bottoms. That's just not me. I'd rather just stick with some EMAs, find a trend, and try to ride the trend. That then would answer your question, Corey. The second answer to Julian's question, I would say it's more right now I'm trading a pullback strategy. We backtested this pullback strategy. We paid some guy to build the code. We backtested it with real backtesting, over 50,000 trades. It's a 60% win rate at 1-to-1. So how I'm adapting to current market conditions with all the uncertainty between, is the Fed done cutting rates? Are we actually going to go to World War III? Blah, blah, blah. I'm taking profits more aggressively, managing stop losses more aggressively. I'm really selective with my trading now that I have more money to trade with than ever before as well. So I think that mixture, right, that combination of aggressive profit taking, risk mitigation at an aggressive level, not trying to hit home runs, really, and then being selective. Those three things coming together right now are what are allowing me to be profitable this year. Because a lot of guys are struggling. Even good traders I know are not up this year. So to be up, I think is a good thing in a market like this. And I think when the market turns, maybe 2025, when the rates are low again and we're really back to maybe some type of QE, then we could see another bull run and things could get a lot better, like they were in 2020. But for now, short-term trends, I'm buying, I'm selling, I'm doing a lot of SPY trading because that's fun to me. So that's where I can combine to the macro stuff with the technical stuff. And that's when I find my best trades, honestly, is when I'm technically aligned with the fundamentals and I'm trading a good trend where if we're moving up, it makes sense that we're moving up. Sometimes when you're getting news where it's moving in a direction, but it doesn't make sense, those are where I don't normally find good trades. I try to just stay out until I can make sense.
Right, absolutely.
Yeah.
And so my big thing is always risk management. Sure. I could tell somebody's their profitability with just a handful of questions because I've talked to so many traders over the years. Sure. How do you? I know you mentioned very aggressive risk management. What does that look like from a numerical standpoint?
So I can give it to you in 2 scenarios, right? I tell the guys when I'm coaching them, if you're trying to pass a funding challenge, and you're trading this strategy, we call it the A2. I'm actually going to be doing a webinar on this at the end of the month too. I'll make sure I send you guys the info on that because I think everybody would like it. If you're going to trade a strategy that's a one-to-one risk reward strategy and you're trying to get funded, there's no reason to leave 75% or even 25% of that position on. You should be taking full profit, trying to win a little bit higher out of the 6 out of 10. Like my win rate's about 80%. So if you can bump that to like a 7 or 8 out of 10 win rate at 1-to-1, you're going to get funded. Just got to take your time. You're going to get it done. So that would be the getting funded. If you're funded, right now, as I'm funded, I'm leaving some of these pieces on. Maybe I leave 25% and I lock a stop loss at break even. So I can run that position, can't lose any money. I've already bagged profits. And if it wants to go more, I'll let the market tell me when to get out. Back to the reactive, not forecasting thing. But when you're trying to get funded, I think you're going for a target. When you're funded, you're just trying to preserve capital and grow it at a pace that makes, you not be trading too much, but not be under trading either, finding that middle ground.
This is so important. So, people come on board and they think there's a one size fits all for getting funded and actually trading. So the fact that you've drawn a line between the two and say, hey, listen, this is how I want you to manage risk in the auditioned portion, and this is how I want you to manage risk in the live portion is a huge bolster for all traders. I think people come in with very, a singular mindset, make money, make money, make money, where maybe their attitude needs to be a little bit different on the initial part. So that's excellent that you're kind of spreading that word.
Thank you. Yeah, I mean, it works. It's what's worked for me. I've passed multiple funding challenges with multiple companies. It's what works. Then the other piece of this is you have to find a sweet spot for your position size. So like for myself, 0.25% risk is the average position size that I used to pass my last funding challenge. Nice. I'm taking, 3 to 5 trades a week on average, call it 4 trades a week. Some weeks 5, some weeks 2, you know what I mean? Some weeks none. So you don't need to be heavy in risk to pass any challenge, no matter how many phases, what percent gain. I think higher win rate strategies are easier to learn just strictly because of the psychology that a 40% win rate strategy will do to you. You're going to take so many losses. I don't think many people, at least, again, I've only been coaching for like 3 years out of this whole 8-year thing I'm doing. So I talked to hundreds of traders, not thousands, not tens of thousands, right? I just, in my experience, when I'm trying to coach somebody on just making money in the market, high win rate strategies are much easier to learn. Psychologically, they feel better when they're winning and they're making money and they're bagging profits. Are they leaving money on the table? Of course, you could be making more money. You know what I'm saying? Like, you got to let that go. So when you can get the confidence right and you match it with a reasonable position size, I think passing a funding challenge is not that difficult. But it's putting these pieces in place. I'm making it sound probably much more simple than it is. You know what I'm saying?
Well, it is simple. It's just not easy. It's hard to do. It's all in here, but it Correct. Is. The principles are simple. Manage the risk. Yep. Get your wins and manage the risk. And really, that's the most of it. Now, Austin, do you actually have a training module, or is any of your training specific and caters towards prop funding?
The Blackshirt Club is our mentorship group. That's what we call it. It's a private mentorship group. It's a small group of people with me and my 2 guys, Tom and James. You know them. Sure. They're coaching it with me. We each take 5 people at a time. And it is built to get them funded because Tom, he was one of the more recent success stories from ASFX. James as well. They both went through my course. They both just came up from the ground. I didn't go find them and bring them on board. So Tom was able to come in, no experience trading, worked with me for 4 months, and he passed a challenge. So that was what set the model up for the 3-month Blackshirt Club. So people pay, it's a 12-week program. They trade with us every day very closely. We work together all day, every day, basically for 12 weeks. And we put them through this rigorous tracking. It's really what it is. It's tracking their trades, their habits, all of their ideas. And we figure out what are they doing well and what are they doing that's hurting them and costing them money. And then really we just help them stop doing the things that cost them money. And then they just make more money because they're just profitable already. Most people make money. Really, especially if they have a strategy. It's the stupid extra losses that they're not paying attention to, right? So you just got to point that out enough, peel back enough of the layers of mistakes, and you can build a trader into getting funded. We've had multiple people come in the 12 weeks and pass challenges.
Very nice.
Yeah.
And are you doing the tracking via journaling? How are you getting them to find those
all
problems?
In a spreadsheet. It's an automated spreadsheet. So they fill it out when they come on board. We just sent out a version. We update it often. So it's version 3. We just issued it today. So like the spreadsheet does everything for them. They have to fill out a couple of things when they come on board. And then every day they do a daily report card, and they're all tabs at the bottom. It's pretty cool. I can show you when we do the pre-shirt.
Yeah, absolutely. So most of these guys who are going through the Blackshirt Club, are they looking to get funded with a prop firm, or are they going to be trading their own account? What's the split?
90%, 9 out of 10 of people that come through are trying to get funded with a firm. Every time. Yeah.
So from what you've seen, this is it. Prop trading is the new standard.
Oh my God, yeah. And if somebody
That's
doesn't know
what
about
we've
it,
seen as well.
when I tell somebody about it and they don't know about it, I feel like I'm like cracking open their mind, and they're like,
I mean,
what?
I was same with me. Their eyes just light up and they say, where has this
Right.
been all my life?
Right. Right. And I'm like, where are you? Like, you know what
Yep.
I'm saying? Like, if you're anywhere on social media, if you're doing any type of research, you should know about this stuff. It should be, what firm are you getting funded with? That's really the
Right.
question.
Right.
Yeah.
Absolutely. Absolutely. And now there's, as you know, there's a ton of new interest in prop space, new firms coming onto the market all the time. What have you heard out there as far as competition wise? Because, we hear a lot, of course, but you have an ear to the ground with specific traders. What are you hearing from the traders in the space in general?
I think that most of the people now understand that the funding thing is not going anywhere. A firm might come and go, but this idea, it's not going to disappear. There's too much money involved in it at this point. It's going to change, I'm sure, but it is not going to go away. So now everyone is really looking at it on a standpoint of, like, again, I'm just speaking from, because I talk to people that are really trading. They want good spreads. They want a lot of assets to trade. They want to be able to hold their trades over the weekend. Those are the three things that continue to come up. That's really it. No one complains. Again, I've sent a lot of people to you guys. I have not heard anything negative, right? Nothing negative has come back to me yet. No one complains about the lot size restriction. No one complains about the drawdown rule, because, like you said, if you're catering to the kind of trader that you guys are, and I think you do that through a lot of different things, your marketing, but also your pricing and everything like that, those people, they take it very seriously. So I think,
right.
Yeah, I think that's the word on the street. It's like, just better spreads, more assets, hold over the weekend. Don't make me close if I don't have to. That's it.
Got it. Yeah, absolutely. No, we're building a firm based on high integrity, and having those rules in place. A lot of guys who are just starting out, they want 500 to 1 leverage, and they're really excited about that. And I try to explain to them why that might not be in their best interest.
How do you have the patience to explain it to them? I literally just send them a YouTube video. I'm like, you got to just, like, because I remember being that guy. I mean, there was a broker when I was trading, like, back in the day, 1 to 3,000 leverage.
Wow.
Like you could just,
you're done before you start.
You literally, you put $100 in. When I first started, I was funding accounts with $75, $100 off my debit card, just spending money. I had no idea what I was doing. Jack the leverage up, one position gone. And sometimes because the position would be so big, you'd place it and it would close you out right away.
Right.
And you'd be like,
just on the spread. On? Yeah.
Just straight gambling. That's the thing about trading. The line between traders and gamblers, it is the thinnest line in the world. It's so thin. Any trader can become a gambler any day of the week, just with lots of focus. Yeah.
Yep. It's all between the ears.
That's it. It's crazy. Yep. I was telling to this girl, Sarah, she just graduated the Blackshirt Club today. We had her last call. And I was saying to her, I was like, you could be out at the bar with your friends on a Thursday with your $1 million funded account and just start giving it away right there. What's the difference between that guy and me? Focus. It's it. It's just focus.
Yeah. Discipline. That's the main thing. Absolutely.
Yep. Now, Austin, with the Blackshirt Club, real quick, are you, obviously you're talking about, the theory, or I should say the trading, that you're actually back testing right now, the pullback strategy.
Yep.
Are you also telling, the folks that come in who are just trying to figure out, get their feet wet, learn how to do it? Are they also risking, 0.25% as well? Is that kind of,
No.
standard? Or?
Good question. No. Sarah, the girl I just mentioned, she's risking 1% per trade. I've got guys that'll do 0.75. I've got a guy that likes magic numbers and he does 0.33. Everybody does whatever they want to do. But here's a good piece of advice for break position size that we've been working on that's really helpful. So I want to share this. Instead of, like, for us, we have a grading system, right? Very simple. Every trade is not the same. Some, like our A2 strategy, it could be an A grade A2, and that's a high probability, or a C grade A2, right? So the A's should get more risk than the C's. Your best trades, you need to maximize them.
Yeah.
So when we are sitting down with someone to try to build their position sizing plan, this concept of bringing up the floor is the new way to look at it from my perspective. And here's why. Those A setups don't come as often as those B or C setups, naturally, because they're higher probability, they're more rare, and they win at a higher rate and whatever. So instead of trying to increase the position size on the A setup, which you don't even get that often, so you don't have a lot of experience trading it, bring the floor up on the C setup. Okay, you're risking 0.1%, small, on your C setups because they're low probability, but you want to play in the market. Now let's up that to 0.2 this week. If it's not worth 0.2, don't take the trade. Yeah. Okay, let's bring it up again, 0.3. Just slowly. 0.4, 0.5. Keep bringing up that floor until you finally find the level where you're like, this is the comfortable minimal risk that I'm cool with, where it's not so small that you don't give a shit about it, but it's also not too big that it would hurt you and make you go off tilt psychologically, hurt you psychologically, not financially. It's only 0.5% or whatever. So you want to bring that floor up rather than bringing up the A setup. I think it's been really helpful for a lot of the guys because it's making them more selective. And then in that, because the position size is bigger, they're making more money on those wins because they're being selective and then hitting the better set. So everybody has a different position. So to answer your question directly, Julian, like I said, some girls are going to do 1%. Some people are just different, you know. But I think what is clear, the more money you give somebody, the smaller percentage risk they play every single time. Every single time.
Except for the gamblers.
Except for the gamblers. And honestly, right. I call them idiots because you just got a funded account and now you're going to get aggressive. Like now you think this is the right time? Come on, man. You know? Yeah,
absolutely. You know, going back to the
starting to ease up a little bit, you know, as you get funded, like you said, find that level of balance, you know, where you can make some money. You don't have a limit. That's what's beautiful, obviously, about SurgeTrader. You know, you don't have to force it. I always tell everybody when I get on live every morning, I go, guys, look, if you're already up 1, 2, 3%, again, this is all based off of your own, you know, risk appetite and what you're looking for on the week. But if you're up midweek, Wednesday, it's okay to be flat on Thursday and Friday. Leave it alone. You know, it's
100%.
Out. I always call it the jet ski area, the consolidation. I go where it can turn on a dime at any moment. I go, do not force that trade. You want to be a market participant so bad. And then it's the gambler who's like 5% on this trade. It's like, dude,
do you want to trade or do you want to make money?
Exactly.
That's what you should ask yourself. If you want to trade, set up a demo account and just trade. That's not going to feed your ego, so you're going to hate it.
Exactly.
But like that'll at least give you the buttons to click.
Right.
But I think, you know, a lot of people get roped into like, I want to be a full-time trader. And then they think you have to be at the desk all day, every day. It's all about making money. Just stop thinking all these other preconceived beliefs. It's so annoying. You have to have a watch and a car and a this and a that. I got to live here. It's like, no, you just need to make money, take payouts, get withdrawals. That's it. How you do that, 1 hour, 20 hours, it's up to you. I choose to be at the desk as little as possible. I choose to be in the market as little as possible. I do coaching calls and I'm at my desk all day.
Sure.
But like in the market, I choose to be there as little as possible because you never know what's coming. I think that's because I really got into heavy, like my level of trading now when Trump was in office. And you remember, I'm sure, Corey, when Trump would tweet something, the market would just, China trade war, boom, market reacts. Yeah. So it taught me how anything can move the market. Leaving money in the market is not the way to be. So especially as a day trader, if you're investing, different. We're not talking about investing. Right. Day trading. It's like get the money, get the nut, see you later. And especially like I moved to Florida from Pennsylvania just for the weather. I want to be outside. I want to be hanging with my friends. I want to be doing stuff. I got the boat. I got all this other stuff. So it's like you got to enjoy your life. You can't get roped into trading all day. And then what you end up doing, like you said earlier, Corey, you just give it back. How many, I literally with Sarah this morning, hit a 1% risk, pulled 2.69% on the first trade of the day. She ended up down 0.4% on that day or something. I'm like, oh, it's so frustrating. Just walk away. You got the nut, you know?
Right. Well, that's why it's nice to have, I say nice. For me, it's an imperative to have a trading plan. You know, if she had in her plan a certain, you know, a rule that says she walks away after a certain amount of trades.
Right.
Right. Exactly. She could have booked that money. So it's especially for new traders, as you get more advanced and you're more familiar, you can take a more discretionary approach. But for a new trader, a rules-based approach is
it's so needed. But you're right. But getting her to stick to the trading plan is what's hard.
Yeah. Right.
She's got them.
Absolutely.
But when she was in a funding challenge with a firm with a time limit, when you put somebody in some of these time challenges, like people go crazy. You see the dark side of people's trading. 2% risk, 1% risk, 4%. Like you see in the last couple of days when they're about to fail, they just go out swinging.
Go crazy.
And it just builds bad habits. So I think and this is something I've been doing too. I've just been pushing people to think more critically before they take their first challenge. Are you the kind of person that does well with your back against the wall? Some people do. Like you have to know yourself. And I'm not saying that to be like, act cool and be like, yeah, I do well with my back against the wall. No, be honest. Like, do you do well under pressure? Like Julian, he's in the NFL. He's catching NFL passes, bro. Like he does well under pressure. You know what I'm saying? People like Julian can pass a funding challenge in a time frame if they have to, but not everybody's like that. And I think majority of people aren't like that. So a firm like Surge, where it has no time frame, is much more appealing. And it then doesn't allow them to make the mistakes that then really build bad habits. You know?
Right. Yeah. That time limit, we hear it nonstop. You know, the time limit and the single stage are really the two things that people just love as far as the audition goes.
But what makes no sense, like you said in one of our videos, Corey, if you really cared about the best interest of the trader, why do you even have a time frame?
Exactly.
Like, why does that make sense?
Yep.
Right.
It makes no sense.
In the road, exactly.
It's a road bump, right?
Exactly.
So they can make money, and it's fine. But it's just like this is where people need to think critically. Like, use your brain.
Yeah, absolutely.
Now, Austin, kind of diving into your trading plan a little bit. What you even said it yourself. You want to be outside. Who doesn't want to be outside? Hanging with the friends, hanging with the family. Talk a little bit about, do you have a time frame? I think you and I jumped on last time, and you were kind of touching on these points, which is I'm trading from here to here. Even when I start getting close to my time I want to get off, sometimes I won't take the setup, even if it's maybe it is a A+ A2 setup. Talk about that a little bit.
Yeah. I think it's just I've seen the benefit of the routine. If you keep a disciplined routine, the output from you, the byproduct like of your work, is always better. So even if it means missing short-term money, I really believe that I'm better off to walk away from the desk, not take a loss, miss a win, but go to the gym and not miss my workout. Because if I miss that workout at 12 o'clock, I'm going to be pissed the rest. It's just I'm not myself. That's my wife. So the routine is basically I wake up, no alarm clock, normally like between 5 and 6, sometimes a little later if I'm up later. Yeah. I come in here, push-ups, water, just try to get my body moving, because I listen to a lot of like Andrew Huberman and that stuff. I'm a nerd, like in health stuff. I just got blood work done for the second time and I'm 28. Like I like data, bro. So I'm a nerd when it comes to my own health. So I do some push-ups because it's good for your brain, get that going a little bit. And then I get into the Discord with the guys. So I'm basically picking up where Tom and James are running the London session in the Blackshirt Club. I'm picking up and running the New York session at about 7, 8 o'clock. I don't do coaching calls in the morning anymore. Now it's just easier for me to do them later, because I like to give people my energy when I'm more awake. So no coaching calls in the morning, just Blackshirt Club and trading. I trade till about 11. If I see a signal at 10:30, like you said, I'm probably going to pass and just mark it up and just say, yeah, I mean, like, it could be a winner, but I don't need that trade. I think that's the good mindset to trade from, is like, I don't need it. Then I trade better that way. So hit the gym, back at 1 o'clock-ish, 1:30. That's when I normally, because I do a lot of intermittent fasting, again, health nerd. So I eat my first meal. It's normally a smoothie my wife makes, hit that. And then by 2 o'clock, I'm always booked. 2 o'clock is either podcast, coaching call. Someone took a time slot at 2 o'clock and booked out like 3 Mondays in advance, 3 weeks in advance. And then I normally work till 5, and then afternoon, like 5, 6 o'clock, pool, outside with the wife, walking, doing something, cooking dinner, something like that. So it's a pretty much like a normal day, but it's a day that I built and I like it. And then like the middle of the day gym thing is so huge for me, bro. And then being able to go outside. Like, I lived up in Pennsylvania where most of the year it's gray or it gets dark really early. And like when you want to be done work, you can't go outside. It's beat. Here, you guys know, we don't have that problem.
Yeah. Oh, yeah.
5 o'clock, the day is just getting started at 5 o'clock, bro.
Especially now, this time of year is even better.
Exactly.
Running all the way to 8:30.
Exactly.
Also, one of the things you mentioned a couple minutes ago was that you don't need to take that trade. For a lot of new traders, they feel an urgency to leaving money, and I think it has to do with confidence in their setups, confidence in their overall trading. When did you become kind of well-rounded enough to say, hey, you know what, I see this setup still within my time to trade, it's not 11 yet, but when did you build that confidence that you could say, hey, you know what, I'm not going to take this?
I think two things happen. You get more money to trade with, and you're tired of taking losses. This one comes first for sure. You're tired of taking losses that you easily could point to and be like, I lost because of that. I lost because there was news coming and I got in 15 minutes before news. Like, why did I hold that trade into news? I lost because I took that trade right at the end of my trading hours, and my trading hours stop at a certain point because that's where the back testing was done for, in this certain window. So if there's something easy to point to, I think you touch that stove enough, you start to realize, do I need this trade or do I want this trade? I think a good question to ask yourself before you take a trade is, will I be more pissed at myself if this is a winner and I miss it, or if I take it and I lose?
Yeah, absolutely. Yeah, absolutely. How am I going to, what's my emotional state going to be with those two different outcomes?
Exactly. And even another way to phrase it, I guess you could look at it regardless of the outcome. If it's a win, are you going to be pissed that you missed a win? Like, is that really the mindset you want to be operating from? Right. Or would you be more pissed that you took a trade towards the end of your hours and you lost? I would always rather just miss the win than take the unnecessary loss where it's like, oh, I lost because I should have left the desk. You know,
that's a winning mindset for sure. That mindset, teaching people that is difficult. Getting the concept across. It sounds easy enough, but so many people, particularly because trading's so hard, they've had to spend so much time in front of the screens. They've had to look at setups for so long, and they fall in love and they get married to these setups. And so flipping that switch, I find, is trading maturity.
Yeah, but you guys are doing it for people because I can help them understand the psychological side. You guys are giving them the capital to make it happen, to actually then be cool with saying, I don't need this trade. I want better trades. I got more money to trade with.
Yeah.
Right. Absolutely.
Yeah.
Yeah. Having that bankroll is important. We found that the bankroll prevents people from taking those wild gamble trades. They don't need to make as much. Whereas you have a tiny account, you try to make 30 or 40% per trade, it's all over for you really quickly. So you get the capital, bounce it down to 1%, like you said, 0.25, and something much more conservative.
I mean, you guys are giving people the opportunity to think, hey, if I get $1 million and I make 1% a month, that's 10 grand. I bet most people listening would be very happy making 10 grand on 1% a month from their trading. Absolutely. You know what I'm saying? Yeah,
absolutely.
So just having that thought should hopefully motivate people to be more disciplined and be more focused on education. I mean, I know I sell education, so of course I'm going to say that, but I think that's the mindset. Like when I got into trading, there was one firm and everybody thought it was a scam. There was no way they were giving you money to trade with. You know what I'm saying? There was no way. So I was like, I got to trade my own money, trade my own money, trade my own money. So it was this new opportunity for all these people. It's like, oh, that part's already taken care of. Just spend money on education. And you got people that are like, I don't want to invest X amount of money in a course or X. Then, okay, but you want to make $10,000, $20,000 a month. That frustrates the hell out of me. When people are like, I have big goals, but you don't want to invest in yourself. Every single successful person keeps saying investing in themselves is what helped them continue to grow.
Exactly.
Right.
You don't want to spend $1,000 on a course or a mentorship. Like, come on, bro.
That's it. Invest in yourself and use other people's money. That's the crux of this show right here, right now.
That's literally that is everything. Yeah.
Yep.
No doubt. Well, guys, I want to switch gears a little bit. Austin, if you want to pull up a chart, feel free to. I can share your screen here. We can kind of dive in a little bit. I know you had said that you hadn't looked at anything, at least as far as that was worthy. We're past our allotted time there. We're flat. But I jumped in a couple moves this morning with US 30, so I'll share my stuff too after you show me yours, and then we'll kind of go from there. That way,
cool. I think you should have my screen pulled up, so you should be able to throw me. Yeah, there we go. Beautiful. So this is, I can show you like what this is. So these little flags here, this is that A2 strategy. So it presents long and short. The letter grade is a variation of it, dependent upon what the other indicators are doing. So we back tested 8 variations long, 8 variations short, depending on what the indicator down here is doing. And what this is an RSI and a moving average. That's it. It's nothing fancy. So it's a trend indicator. That yellow line is a really strong trend indicator. Like we call it market sentiment. So you can look for these A2s on a bunch of different time frames. What I was looking at this morning, so we had the news come out at 10 a.m. News sends us lower. I don't really care how much it beat forecast or whatever. News to me on a 15-minute bar finishing red like that was like, okay, we might see more movement to the downside. We see follow through after that and then a new low of day at 10:15. So the short idea I had was at 10:30 to short it at like 41.35 with a stop like 41, basically like 10 points, 11 points higher. Because if we see a move to average daily range, which is like what it moves on an average day, we could see 1.4, 1.5 R risk reward on that trade, which would be pretty good. The thing about this, I would just look at yesterday. You see how yesterday it breaks through these 2 green horizontal lines? Mm-hmm. That's showing me it broke through average daily range. Yesterday was a strong rip. So today we could see more than average daily range. I mean, if you go by whole numbers, you would say like maybe a strong down day, 4,100. That's almost 3R on this trade idea. So there's potential for more movement, I think, downside on the indices today. And I think it looks like Boeing had a bad day. So Boeing probably pulled US 30 down. I'm looking at US 30 there. NASDAQ looks like it could definitely slide lower here, trying to like kind of make up some of that move yesterday. So that's kind of what I was looking at this morning. And I was honestly looking at Bitcoin longs. Here we had some long signals on Bitcoin this morning. This sentiment indicator told me to stay bullish today and be looking for buys. So I was looking for buys this morning. I haven't gotten back into trading Bitcoin only because I've been kind of watching, like I told you guys, the spreads between the funding companies and stuff. And I'm going to be doing it with you guys. So my future Bitcoin trading will be with Surge. But these longs fail and sometimes strategies lose. So I can't win every trade.
Right.
Absolutely.
Yeah. So tell me about US 30, bro. What were you looking at on US 30?
Yeah, exactly. Well, you're on the chart right there. Let me go ahead and put mine in really quick. Share my screen. check this out. So I actually have, can you guys see my screen?
Yeah.
Okay, beautiful. So I want to dive in a little bit on a smaller time frame so everybody can kind of follow along. It was as simple as, of course, it's as simple as we've been doing it for a while now, throwing up a fib actually on the 1 hour from here, bull to bull up top. And then obviously I saw it start to approach the 38.2 area. So obviously once we got down here into the nitty gritty, this is actually 2 buys that I took on quick scalps. So, I mean, it was essentially a 1-to-1 as you see here. Same thing here, a little over 1 to, almost a 2-to-1.
When you put take profits in, are you getting hit on take profits or are you closing manual?
I'm closing manually.
Nice, bro.
Nice. So obviously I have my stop losses here. I'm keeping them tight. Sometimes it's 10, 20 points. But obviously it was going into my 38. As we all know, 38's a very volatile time, where it'll either hit, reject, and come screaming down. And like I said, I was able to hit this first take profit and then continue to push on up. Realistically, I was looking for, typically if it goes over 38.2, I'm looking for it to hit 0 or negative 27 extension is usually what I'm looking for. But because of the market conditions, because of news, retail sales, everything else, I go, okay, this could be a nice fake out here. So let me go ahead and take my profits like you had said earlier. Let me get in and out. And as I start seeing it start to turn back over here, I put my stop loss right even with 38.2. I said, if it pushes back up here, I need to be, out of this position anyways. And I wrote it down to 61.8, which is always a pretty easy, healthy move for me. 38.2 to 61.8 is usually a gimme, with my strategy. Now, I know that, I mean, look at what actually happened.
I know, look at that rip, bro. But that's a nice read, bro. That's a
exactly.
Real nice
read. So, it was definitely something that I wanted to be in, be out quickly. It wasn't, a situation that I was looking to hold long term. But when you guys look at my longer term chart here on, let's look at a 4 hour. I mean, clear as day, we're in a bit of a channel here. We're making higher highs, higher lows, higher high, higher low. Well, okay, we've broken structure. Now, obviously, somewhere in here, I'm looking for this to pull back up, obviously into the 78.6, 88.8, and then continue to come down and maybe test these lows on this, support area. So that is, those were my moves today. Again, like we were talking about before we got on stream, I was out before 11. You know what I'm saying? So I wanted to shoot out before 10:30. I wanted to be, exactly, man. I mean, it's like you said, this is about making money. This is about, getting withdrawals. And so it's not always to a T. I'm going to trade from 9:30 to noon. I just give myself that range, to say, okay, I'm looking at the markets past that point. Let me get out of here. The banks, institutional traders are getting out of the market. Everybody's going off to lunch. And then everybody's coming back around, 2:30, 2:15. And then now we start to see volume again. And obviously I'm a volume trader. And that's why I trade New York session, especially for indices like this. US 30 and gold are the things I look at. Now, gold typically, as you know, I can catch moves sometimes before 9:30. But lately, I've really been looking at US 30 much more heavily than I have gold. And gold has been doing craziness right now.
Look at it today, bro. Go look at it right now. It just broke under 2,000.
Wow. So, it's let's see here. Let's pull up gold. Let's just take a gander. Yeah,
that's exactly. Bro, gold is so, I've never been able to trade gold well.
Really?
Never.
Yeah. I mean, very volatile. Obviously I had this trend line here where I have my 2 points, bull bear, and then I've got another one here. It's obviously broken.
Other people saw that. Other people were buying there too, and it just said no. Exactly. See ya.
So I tried to, for me, obviously I just try to keep it simple. If it's above, I tell people this on our lives. When it's above the trend line, obviously we're looking for buy opportunities. When we're underneath, we're looking for sells, And so I don't want to overcomplicate the thing. What I'm looking for at this point, and obviously it's just continuously tanking. I want to see this thing pull all the way back up here and test this and potentially play back into this 4 hour zone that I have marked off. But until then, I'm not getting in this because the analogy I like to give is this is like the falling knife. You're going to get cut. Sure. Not about to just buy this just willy-nilly and go, I think it's going to pull on back up. I need to see something on the smaller time frames. Let's go down to the 15. I mean, nothing, no, bullish engulfings that I'm seeing yet. That's giving me reason to get back in. It's clearly just testing this 4 hour zone and it looks like it wants to keep going. So we're going to see, we're going to assess it. We're not going to guess. And man, that is, that's my take on gold and US 30. I was able to make some money today, but I don't force it. If I don't see it on Monday, even when everybody's, kind of, putting their hands together going, okay, let's make some money today. It's still, I need to see that there is, to your point earlier, I need to see a solid trend. I need to see higher highs, higher lows. I
Yeah.
want to follow that trend. And then like, Corey and I have spoke about, and like you and I have spoke about, it's about what I'm looking for, in my trading plan. So for instance, it's obviously, gotten bigger. I've wanted to get bigger targets. So maybe that just means obviously, upping my lot size. But ultimately, I used to tell Corey, my thing used to be 1K a day walk away. 1K a day walk away. So, I had a plan. So sometimes even when I knew it was going to hit, let's just say a 38.2 mark on fib and everything looked good, I was with the global trend and I'm moving, I would still take my money out. And it was just like, but it was what helped me, start to build a nice foundation of like, regardless of what you see, take your money,
Yeah.
Go enjoy your day, get off of the charts.
Absolutely.
Every
Those
time
rules.
I would stay in longer and go, I'm going to take a little bit more. I see it's moving. Something happens. I don't even know, it's like the banks are like, cool, Julian's in. And then they just like send it the other way. You know what I'm saying?
Yep.
Like, oh my God.
Right.
So, I mean, that's how it feels. And I've, like you said, you put your hand on that stove enough times and you're like, okay, I'm done doing this,
Yep.
And so you just build that plan. You have to make mistakes though, trading errors. It's inevitable. And it's funny. And Corey sees this every day. You see it every day. And I talk to people, in our Discord and talk to people just, on DMs and stuff too, that they want the 90% hit rate right out the bat. You know what I'm saying? What's the magic, sauce? And it's like, dude, you have to test some things in order to know what works for you and what doesn't work for you. In my opinion, coming in with smaller size would be very wise because you don't want to have a position go the wrong way that you were very, prominent about, that you said, this is it. And then, like you said, you just derail yourself completely because you lose 3-4% on that one particular move.
Right. Absolutely.
So, that's my take on it. But
yeah. I would just add in, because I agree with everything you said.
Yeah.
I use Forex Factory. I don't know if you use that for news. They had
Sure.
some, it says here, hawkish comments from Fed's Waller send May rate hike odds up. So rate hike odds up, stocks come down, gold comes down. It's interesting. So that's when I'm back to what I was saying earlier about like the fundamental stuff. I like to try to put it together, but the way you trade is similar to how I trade in a way where we are trying to catch momentum. So the fundamental thing sometimes can be the catalyst. I had a markup yesterday on a GU trade that picked up, 2-3R just based on news bar. So I think momentum strategies are, I think, probably my favorite, because most of my trading has always been breakouts or pullback when we're getting some type of momentum against that pullback,
Yeah, exactly.
Yeah.
Now, I know you guys have talked separately, Corey, just obviously for the people who are viewing, maybe it's their first time, kind of tuning in with all three of us, but talk a little bit about, just briefly, what are the traits, or what do you see, the pitfalls for people who are, failing challenges or are not getting over that hump, and those who are very tedious about a trading strategy or plan that gets them over. Austin touched on this a little bit. It's like, get a plan, do what you're supposed to do. Don't worry about trying to pass a challenge and be funded and get a payout in one day, and I think that's big.
No, absolutely. And it goes back to what we talked about earlier. It's just, it's simple. It's very simple. It's just not easy. Getting the mental fortitude to do it the right way and have a plan. And, I find that people who aren't comfortable with their strategy tend to get into hope mode. So they're hoping this is going to work out. They stay in the trade too long, going against them. They've put the time in and they're just going to hope it away. That's not a long-term solution. You've got to have a strategy with proper risk management, and stick to it. Dedicated to it and making sure that you're following what you set out to follow. Now, a little bit more of a discretionary approach, but somebody who's just coming aboard, you want to be thematic. You're trying to do something a little bit different than collect capital. You're hitting for a target, and you don't want to fail out on that. So develop a plan, find something that works for you, back test it, get in the trial, get in the audition, and take it slowly. Don't fall in love with the setup. Cut your losses when you see them, and mainly follow those trading rules.
Yeah. I appreciate that. Thank you for sharing that.
Kind of
back to the data and to the health stuff. Also, I wanted to share this with you, obviously, and we'll talk about this obviously as you jump on the podcast as we get that stuff going and et cetera, et cetera. But ultimately, I just went to shout out to 10X Health Systems. I'm not sure if you're familiar with them. Very similar to what you did, the blood test. Grant Cardone, obviously, he's the GOAT. But he is somebody who I didn't realize was actually in Naples. Point is I went and did the blood test. I'm going to be getting results here soon with the DNA.
Nice.
So, dude, this is all about, again, playing, with the Falcons in 2018 and 19. I've always tried to optimize my body, but at the end of the day, training and staying healthy and staying in shape has never been an issue. But of course, there's a level of playing kind of the guessing game. You put the right supplementation, the multivitamins and stuff like that into your, repertoire, and you go, well, I feel good. So, I'm going to keep doing this. And you eliminate the stuff you're not supposed to do. I think it just ties well into trading as well. And I think that's why we share a very similar message and James as well, which is, I don't just geek out about the data or geek out about the training stuff, although I've done that for 20 some years of my life. When I was 4 years old, pretty much when I started walking, I started doing speed and agility and ladder and lifting and all that stuff. But that's just the environment I grew up in. But ultimately, it's if your mind is sharp, right? If your brain is clear cognitively, then you can perform even better on the charts. You're going to make more profit. You're going to be able to spend, longer days out there, with your baby, and swim and run around and do that kind of stuff. I don't want to be, making all this money and be just like old and decrepit. You know what I'm saying? Like my back's hurt.
Health is wealth.
Absolutely.
Yep, absolutely.
And so that's so important to me. And I want to, kind of just touch on that, obviously, as we kind of close things up today, which is like people need to be taking, a little bit more of a deeper dive, on the level of like health importance, because like you said, the misconceptions or the preconceived notions of, well, you're making money online, but golly, I don't want to sit in front of a computer for 12 hours. That's not the case. Who told you that? It's like what you've been reading or what you think it is, because it's unfathomable the kind of money that we're able to make in a day's time, and so you must be slaving away. And it's like, no, I'm actually enjoying my life. Like you said, I get to build out my own schedule. I get to do whatever I want. If that's nothing that day, then I'm not going to do anything. But if I want to go and hang out or come to, your side of town and hang out with you, then we get to do that too, And so I just want people to understand that the reason that I do things like this is just to optimize my body, my health, my mind, so I can make more profits in the market. That's what this is about. That's what it all ties
100%.
back in, and I'm glad that we are of that age and in a time where we don't have to throw $250,000 of our own money and go, well, let's figure out what this trading thing is, and a lot of people had to do that in the past, and
Oh, yeah.
lose a whole lot of money. I mean, Corey, obviously, being in the space, and it's like, I cannot imagine, I think I've blown more accounts than I like to admit back in the day. And it's like, but that's what it is. That's the cost of doing business. And what that would have cost me in real capital. Oh my gosh. Right. I don't even want to think about it.
Right.
So
100%.
It's the cheat code.
Exactly.
The cheat code to trading education.
It is.
That's a nice way to put
Guys,
it.
is there anything else you want to add before we, jump off of here? I appreciate you guys' time, obviously, as always. I think this is very useful for everybody who's watching today. They get Austin's perspective, what he's trading. Corey, obviously, you're able to get, give real life examples of all the traders that you've talked to and the pitfalls and the little hurdles, that are in the road. And people don't understand it until they dive into it. So,
Sure.
I think that I can speak for all of us that we all encourage everybody to, why don't you try a free trial? Why don't you try to get funded? Give it a go. If you've not, invested in yourself and gotten, courses or mentors or, like Austin, then you really need to look into doing that, because that's the only thing that's going to take you to the next level. You can figure it out by yourself. Absolutely. Corey, you've seen this obviously firsthand, but
Sure. It's a much longer road, road for sure.
So we want people to be, encouraging each other when they get huge payouts. We want to be having them obviously in the Discord and just talking them up and loving them up. That's what this is about. You need a community. This is a very lonely road, if you don't have anybody to share it with. And so I'm just fortunate, obviously, to have you two, as my colleagues and friends to be able to share my trading experiences with. And so if there's anything else you guys like to add, I'll give you guys the floor, but I appreciate you guys coming out. I really do. Thank you.
No, it's
been my pleasure.
Yeah. Corey, you're the man. It's always good to chat with you. Julian, same thing.
You too.
Yeah, man. I hopefully we'll do this again soon. I'll keep everybody posted when the podcast is ready with Julian, so we'll get that edited and get that out in the next couple of weeks. And then I appreciate it again.
Absolutely.
Awesome. All right, boys.
Thank you so much, man.
All right, guys.
You guys have a great day.